As we conclude Chapter 19, it is helpful to bring together everything learned about real estate taxation, from the authority that imposes taxes to the methods used to enforce payment. The entire chapter builds upon the fundamental concept that real estate taxation forms the financial backbone of local government. Taxing entities rely on a stable, predictable stream of ad valorem revenues to support public services such as schools, emergency operations, infrastructure repairs, libraries, and community development. Without the structure and enforcement mechanisms explored in this chapter, communities would not function. The previous sections, taxing entities, ad valorem taxation, special assessments, and tax lien enforcement, illustrate how the taxation system is organized, applied, and ultimately protected through both voluntary compliance and mandatory enforcement. Taxing entities. Real estate taxes begin at the governmental level. Although the federal government does not levy ad valorem taxes on real estate, it does impose taxes on income produced by real property and capital gains realized on its sale. The federal government may also place a tax lien against property when federal taxes remain unpaid. At the state level, governments possess the legal authority to levy property taxes, but often delegate this responsibility to counties, cities, municipalities, and townships. States may also impose their own tax liens when a property owner fails to pay state taxes, such as state income or state-levied property taxes. Local governments and special tax districts are the primary administrators of recurring real property taxation. These entities determine tax rates, collect taxes, and direct funds towards services that benefit the public. Tax districts are created to support specific needs and may include school districts, fire protection districts, community colleges, parks, libraries, stormwater management, sanitation, and bridge or roadway districts. One property can fall into multiple overlapping districts, each contributing a portion of the total property tax bill. Ad valorem taxation. Ad valorem taxation represents the foundation of local government finance. The term ad valorem means according to value, which explains the structure of property taxation. Taxes are levied annually, based on the taxable value of each parcel. The taxable value depends on the assessed value determined by the county assessor, minus allowed exemptions, such as the homestead exemption. The tax base represents the sum of all assessed values within a taxing jurisdiction, excluding exempt and immune properties. Government-owned properties are immune from taxation, while property owned by nonprofit organizations is generally exempt. Once the tax base is established, taxing entities determine their annual budget needs and calculate the tax rate required to fund them. The tax rate can be expressed in mills, dollars per $100 of assessed value, dollars per $1,000 of assessed value, or as a percentage of the taxable value. The individual property tax bill is based on the tax rate multiplied by the taxable value of each specific property. Payment deadlines and billing schedules vary by jurisdiction, but counties often consolidate multiple district bills into a single annual or semi-annual statement. Special assessments beyond regular ad valorem taxes. Special assessments may be imposed for public improvements that benefit only certain properties. Examples include sewer line extensions, sidewalks, lighting improvements, or canal dredging in waterfront communities. Special assessments are based on the cost of the improvement and the proportional benefit to each affected property. Unlike general property taxes, special assessments apply only to properties receiving the improvement. They are commonly paid over several years and may be voluntary or involuntary, depending on whether property owners initiated the improvement request. Tax lien enforcement. When property taxes remain unpaid, tax lien enforcement ensures that government services remain funded. Tax certificates may be sold to investors who pay the delinquent taxes in exchange for interest and the potential to obtain a tax deed. A tax deed conveys ownership after legal foreclosure and the expiration of any redemption rights. Tax sales are auctions in which the tax lien or the property itself is sold. Property owners may have both equitable and statutory rights of redemption, depending on when payment is made and what state law allows. If taxes remain unpaid and redemption rights expire, the taxing authority or the investor obtains title to the property. Tax lien enforcement also includes state tax liens for unpaid state-level taxes. Such liens prevent transfer of property until satisfied and may affect the owner's credit score. Removal requires payment in full, a documented release, and communication with credit bureaus to update records. Review summary. In this chapter, you learned that real estate taxation is an interconnected system involving several layers of government, each contributing to the overall funding of essential public infrastructure. Taxing entities rely on assessed values, exemptions, and tax rates to calculate annual revenues. Ad valorem taxation ensures that property owners contribute fairly based on the value of their property. Special assessments fund targeted improvements that benefit specific properties. When taxes go unpaid, the system protects itself through lien enforcement mechanisms that may include tax certificates, tax deeds, tax sales, and redemption rights. This comprehensive approach allows the government to enforce compliance while offering owners multiple opportunities to resolve delinquent taxes. Understanding these processes prepares you to guide clients effectively and to navigate transactions that may involve tax liabilities, exemptions, or lien issues. Discussion. Why does local government depend so heavily on ad valorem taxation? Answer. Ad valorem taxation provides predictable and stable revenue that supports essential services such as schools, fire protection, law enforcement, parks, infrastructure maintenance, and public health programs. Property taxes are less volatile than sales or income taxes, making them a reliable funding source. How do exemptions influence the tax base? Answer. Exemptions reduce the total taxable value of property in a district, which may require higher tax rates to meet budgetary needs. This affects how the tax burden is distributed among remaining taxable properties. Why is the redemption period important in tax lien enforcement? Answer. The redemption period gives property owners an opportunity to recover their property by paying delinquent taxes before losing ownership permanently. It also protects due process rights and ensures fairness in the enforcement system. How do special assessments differ from general property taxes? Answer. Special assessments apply only to properties that directly benefit from a specific improvement, while general property taxes apply universally to all taxable properties in the district to fund broad public services. Closing remarks. This chapter has provided a complete understanding of how real property taxation works, how taxes are calculated, why they are essential for community welfare, and how governments enforce payment when taxes become delinquent. As a real estate professional, your ability to recognize tax implications, explain assessments, identify exemptions, and understand lien enforcement ensures that you can guide buyers and sellers through transactions with confidence. Mastery of real estate taxation enhances your competency, protects your clients, and reinforces the importance of property tax funding in sustaining strong functioning communities.